Hi, my name's Adam. Welcome to the channel. Thanks for joining us today. Today I want to talk about the biggest struggle that I've seen over the last 17 years in the business. The biggest struggle by far that I've seen Canadians make. This is something that I would say 99% of you will face. So if you haven't hit retirement, this is you. This video is for you. If you've already hit retirement, if you're watching and say, Adam, I already retired, I guarantee you that you either struggle with this or you are struggling with this currently. I'm going to cover off 3 ways to get through it, which I have seen roll out in success with our clients. But again, everyone has their own method. So maybe you have a different method that worked really well for you. Leave your comment below and let us know how you got through it. Help others in the channel. And we do appreciate your comments. Just a reminder for those that haven't joined our Investing Academy, we've teamed up with Brandon and Mark Beavis at their Investing Academy. We've rolled in our financial masterclass and we are creating more classes. So we're going to create GIS, OAS, and CPP courses, in-depth courses that will be rolling out July, August, September. So they're rolling out here pretty soon. We're also doing a monthly live Q&A on there. So if you're looking to ask me questions directly, that is going to be the only place that you get access to that. So join our Investing Academy. Again, there's a link below, $19.99 a month. If you're looking for a place to kind of up your investment knowledge, your financial planning knowledge, all of that, it's education for Canadians. Check out the link below. I promise you it'll help you going forward. So what is the biggest struggle that retirees face? Is it running out of money? Is it when do I retire? How do I pass money to my kids, to my loved ones, to a charity? How do I structure everything? That's none of it. The biggest struggle that we see people make, spending your money early enough and quick enough. Too many of you get your late 80s and you may have a parent or a family member or friend in this phase of life and they still have a lot of investment accounts, big RSPs, taxable accounts. They've had no plan along the way. When you hit retirement, I talk about the laddered income, okay? The go-go, slow-go, no-go phase of retirement. The go-go phase is the first typically 5 to 15, maybe 20 if you retire early years of retirement. Typically it runs up to age 75, so whatever that is for you. Now, the go-go phase of retirement is when you're younger, you're healthy, you can travel, you can do way more stuff, you're spending more money. And I want you to spend that money, but you have to know how much you can spend with the knowledge that you still have enough later on. So let's just use an example. Let's say you retired at say 65 and we put life expectancy to 95. In that time frame, that 30 years, let's say your average spend was $70,000 a year. So you had $70,000 that you could spend every single year for those 30 years. But instead of spending like the level amount, the same amount every year, let's instead spend $80,000 a year early, maybe 70, and then maybe 55 later on. And again, the idea behind it is to spend more now with the peace and comfort and the mindset that you're gonna have enough later on. Too many of you squirrel your money away or you hold on way too tight early in retirement because you're fearful of running out. And that's a real good fear to have. But there's an answer to that fear, and that is to get a plan in place. If you're the type of person that's entering retirement or is in retirement, every day it's like, oh man, I don't know what I can spend this month, this year. I'm holding my money tight. I don't know what I can do. I don't know if I can afford that trip. You need a plan. That's all there is to it. People are fearful and they hold their money too tight, and then they get to their late 70s, 80s, 90s, and they're like, oh, Adam, if I knew I would have had this much money later on in life, I would have spent it earlier. I would have loved to do that cruise or that European trip or this or that, or bring the family to Disneyland, whatever it is. Everyone's got kind of that goal. But there is a point in life, as you all know, there is a point where you're not going to be able to travel and do a lot of the things that you could potentially do now. So if you have a plan that you know what you can spend now, what you can do now, but with the peace and comfort that you still have enough later, to me, that is a great plan. But that laddered income, it's going to depend on everyone. Everyone's situation is different, and I get asked this all the time. Like, is it 5 or 10% drop? It will depend on how much cash flow you need. We want to make sure we're leaving enough in the no-go phase to actually allow you to live, right? So that's a key. So there's no real math to this. It's all situational. I know a lot of you say, yeah, Adam, that's great, but I'm still fearful because later on in life, I'm going to need care and all that. Okay, if you own a home, that's kind of the buffer in the background. If you need a care facility or in-home care, there's that asset there that you can lean on. The majority of you won't need a care facility, and if you do, it's not for very long. So I think that fear is also something that most of you don't live through. And maybe you've had 2 parents and both of them went to care home for 10 years. That's not the normal experience that people have, but it can happen, and you got to plan for that to some extent. I get that. But you still want to build this laddered income strategy. Now, again, have your financial planner build this out. If you're doing a fee-for-service plan, like we do fee-for-service plans for a lot of you watching these videos, and people always ask, like, how often should I jump back in? Well, it depends if things get off track. We provide, a bunch of reports and videos and Excel spreadsheet, and the deliverable package has a bunch to it. But one of those things is an Excel spreadsheet. And that shows you what your account should be worth every single year from today till age 95. If you find those valuations are a lot higher or a lot lower, maybe 15 to 20% off either way, then you want to maybe loop back and have your plan just updated. It's not like they're building out a full new plan. We're just updating it. If your account's worth more than what's on the sheet, you have a tax problem, right? You have more money, we need to look at the tax situation. If you have less than what's on the sheet, you have an income problem. You may not need to have an update, but I typically say every 3 to 5 years, just loop back with your advisor, get an update. If you're working with a financial planner, if you're paying a financial planner who looks after your assets or whatever it is, this should be done every single year. Lean on your advisor to have them update your plan at least once a year. Solution number 2 is to review your investments. If you're a DIY investor, you probably own individual stock. So if I put a plan together for a client that's a DIY investor, they look at their portfolio and I say, look, based on your plan, you need to pull out $30,000, $50,000 a year from your RIF. And the client looks at me and says, okay, that's great, and I understand the tax plan, but what am I selling? Every single company I bought, I don't want to sell anything. And that is a real problem. When you hit the decumulation phase, the majority of you can't afford to live off just the dividends, which means that you're selling stocks. So as you ramp up to retirement, and I recommend you kind of look at this 3 to 5 years before retirement, is make sure you understand what your plan is when you hit retirement. Okay, it's easy to buy really good companies and hold on to them. I find that really easy, but when it comes to the opposite side of the coin where you're actually selling companies, okay, you need to sell $3,000 to $5,000 a month of stock. What are you selling? If I ask you that question right now, do you have the answer? And if you don't, you need to start working towards that answer. And here's a few options for you. Either move your stock portfolio. If you want to keep a DIY investing, which is great, you might want to move from stocks or some stocks into ETFs. When you sell an ETF, you sell a bit of everything. Maybe that's a better transition and just a lot easier psychologically for you to do. If you aren't sure how to do that, whatever, a lot of you, and we deal with this all the time, is a lot of DIY investors, when they hit retirement, they bring on active portfolio management, a professional to look after their portfolio. That would be option 2. Again, both are good options, but the point is you need to think about this. These things linger with you. And what happens is, again, you don't spend your money because I don't want to sell my Microsoft shares. It's a great company. It's paying me a dividend. I get it, but you need to live your life. And what happens is you don't sell the stocks, you don't draw the income that you should draw, and you don't spend your money. And again, you get to your 70s or 80s with way too much. The third tip on how to make sure that you don't hit this struggle when you hit retirement of not being able to spend your money or holding your money too tight is to start working through it mentally 3 to 5 years before retirement. That means you'll build a plan. Again, if you're a DIY investor, what's your approach when you hit retirement? Start talking through the process. If you're married, common law, if you have someone else in your financial world, talk it through with them. What is our plan moving forward? If you can work through these things 3 to 5 years in advance, you will have a clear picture when you hit retirement and you don't have that huge retirement shock. Most of you deal with this on the day you hit retirement, right? You think you've dealt with it up to that point, but you hit retirement and it's like, oh man, it's hard to spend money. It's hard to draw out money. I'm paying myself. And you know what? I think it's a kind of a kick to our ego, right? We've built up these accounts and it feels good, right? Like, yeah, we built up this $1 million account, and I mentioned this in my last video. And I don't think any of us like to see our investment accounts going down, whether it's stock market performance or just us drawing down our portfolios. And again, a lot of you hold back drawing down the portfolio because you haven't mentally adjusted to that process. To me, it's more of a psychological shift. You're starting to see like, okay, here's what retirement looks like. Here's how much I can draw out of my accounts. Here's where it comes from. Here's how long it's gonna last. Here's my go-go, slow-go, no-go phase of retirement. It's gonna encompass all of that. And I talk to people all the time with this. It's like, yeah, I retired 2 weeks ago. I'm like, do you have a plan? It's like, no, that's why I called you. I don't know how you can retire without having a plan in place, but a lot of you do it, and good on you. I mean, I don't have the, to do that. So to me, I need a plan. I need to know, okay, what does it look like 2, 3, 4 years down the road? And I've talked about this. I have goals and plans and all that for personal and business for 10, 15, 20 years out. I know where I want to be in 10 years personally and corporately. It's the same with my retirement. I have a retirement plan for myself. I'm many years from retirement, obviously, but I still have a plan. And I have that plan in case something happens to me. My wife has something in place, structured, and she can kind of move forward without that fearful. So that's part of it as well. But again, get a plan in place. Make sure there's a laddered income strategy within your plan. Again, look at your investments and figure out, am I going to be able to sell these stocks in retirement? Should I start transitioning that now? What does this look like? And the third thing is start mentally preparing for this, whether it's putting a plan in place, walking through the process, whatever you need to do on your end, 3 to 5 years before you hit retirement. So when you hit retirement, it's not a big shock. When you enter retirement, there's enough going on. It's a big shift in your life, right? It's probably the biggest shift in your life other than when you started your job. It may even be bigger. Deal with some of these other things that you can deal with beforehand, mentally, financially, psychologically, all these things beforehand, so that when you hit retirement, you can worry about the other things that are going to come across your table. So thank you so much for joining us in this video. Again, Investing Academy link below, as well as the fee for service financial planning. If you don't have a plan done yet, you can find more information on our website, parallelwealth.com/planning. Thanks. We'll see you in the next video.